Hello, this is Jeff Dutton from the Commercial Service in Shanghai. I'd like to first talk about what is the current status of COVID here in China and how it's affecting both local and international business activity. Well, aside from occasional localized outbreaks that would be considered very small in the United States, China has had few cases of COVID-19 since last April. Life has been largely back to normal, including domestic air travel, since May of 2020, and large in-person trade conferences have been held between August and December last year, including the huge China International Import Expo here in Shanghai, as well as Automechanica Shanghai, which was just last December. Office and factory workers are going to work in person, with a few exceptions when there are localized outbreaks. Everyone must wear a mask on public transportation and while visiting shopping malls, and there is near complete compliance with this mandate. Now, the biggest barrier to business as usual in China is the government's, quote, zero risk approach to COVID. There is a strict mandatory 2-week quarantine for all international air travelers coming into Shanghai, and some Chinese cities have expanded the quarantine period to 3 weeks. This assures no one can come to China for just a short trip. So arriving passengers are virtually all seeking to return home or to stay in China for at least a few months. Given the zero risk approach here, until community spread of COVID in the United States is eliminated, it seems unlikely that China will lift its 2-week quarantine requirement on all arriving passengers anytime in the near future. And it's also hard to imagine U.S. companies electing to send representatives to China on short business trips. Many large companies in China have adapted to the new normal by localizing more of their sourcing, ramping up marketing via widely used mobile phone apps, and by being more open than usual to doing business virtually. When there is demand for U.S. products, CS China, or here all of those of us who are working in the commercial service in the mission here in China, have been able to set up virtual introductions between potential Chinese agents and distributors and U.S. company representatives in the U.S. These introductions have been successfully conducted via Microsoft Teams. The second question I'd like to address is, what is the status and outlook for the Chinese economy? Unlike most other Asian economies that were more negatively affected by COVID-19, China had an economic growth rate of 2.3% in 2020, making it the only major economy in the world that didn't contract last year. After a collapse in the first quarter of 2020, the market rebounded quickly in the last 3 quarters. Consumer spending still isn't back to the levels that we observed at the end of 2019, as buyers are still jittery from the possibility of more outbreaks that could bring the current economic growth spurt to a halt. China has demonstrated an ability to control and contain new outbreaks, and most experts concur that 2021 will see China recover to achieve a growth rate that it was expecting before the pandemic. Now I'd like to address the question of how the pandemic has affected new and used automotive sales in China, as well as the aftermarket sector here. Now, China's auto market, which remains by far the world's largest in terms of annual sales of new vehicles, came roaring back after a severe contraction in the first quarter of 2020. There were 25.2 million vehicles sold in 2020 in China, which is down only 2% from the 2019 figure. But in 2019, the total sales of 25.7 million vehicles were also down even more, 8.2% from 2018. So there's been a bit of a downward trajectory. Within the 2% decrease in 2020 in overall vehicle sales, there were 2 areas of notable growth. One, due to extensive government stimulus, commercial vehicle sales rose a whopping 18.7% to 5.13 million vehicles. And 2, luxury vehicle sales increased as buyers shifted discretionary spending from activities impacted by COVID, like international travel, towards domestic recreation. Sales of light vehicles, sedans, crossovers, SUVs, multi-purpose vehicles, and minibuses shrank 6% to 20.18 million last year. Sales of the top 3 luxury vehicles, including BMW, Benz, and Audi, all rose over 5%, and all 3 brands sold more than 725,000 units each. GM's Cadillac brand, which is produced here in Shanghai, also saw significant record sales. Another U.S. company, Tesla, saw its electric vehicles fly out of the showrooms in record numbers, with 137,000 plus vehicles sold in 2020. But Chinese electric vehicle maker NIO, now listed on the New York Stock Exchange, sold over 43,000 electric vehicles here in 2020, and a dozen more domestic competitors are poised to make inroads in this fast-growing segment of the market. After growing by 11% in 2018 and 8% in 2019, used vehicle sales in China declined for the first time last year since the China Automobile Dealers Association started tracking demand in the late 1990s. As for the outlook for 2021, the China Association for Auto Manufacturers predicts that vehicle sales will reach 26.3 million, which will represent a 4% growth. Unlike last year, commercial vehicle sales are projected to decrease by 10%, while sales of cars and light trucks are estimated to increase 7.5%. And new energy vehicles are projected to increase 40% to 1.8 million units. With international and even domestic travel sporadically severely curtailed at times during the pandemic, many Chinese drivers are likely to use the funds saved to buy a new car. Given the rapid return to normal after March 2020, there hasn't been a significant change to how vehicles are serviced in China. OEMs and dealers have started trying no-touch marketing strategies to promote their vehicles through apps, including official company accounts on WeChat, Weibo, and TikTok. Using these highly popular apps, vehicle buyers can ask for information about the vehicle itself, make a reservation to do a test drive, ask for quotes, and receive after-sales service. OEMs also conduct live broadcasting to reach more potential clients online. What method do we recommend for U.S. companies to virtually correspond and meet with distributors and buyers here in China? WeChat is the messaging and communication platform of choice for businesses and individuals in China. Virtually all of the 950 million plus cell phone users here in China use WeChat for communications and payments. And together with overseas users, there are about 1.2 billion people that are active on WeChat. Although Chinese business culture includes a strong preference for in-person meetings and sharing meals together as a first step toward doing business, COVID has caused many people here in China to be more flexible and forge virtual relationships. WeChat's video capabilities are similar to WhatsApp. Our staff at the U.S. Embassy in Beijing and at our 4 consulates across China have successfully brought together Chinese agents and distributors and U.S. manufacturers and service providers via Microsoft Teams. And we consider that more secure than other virtual meeting tools, though any communications on open phone networks or Wi-Fi here in China should be considered monitored by the Chinese government. Many in China in the business community are also familiar with and use Zoom and Skype. The company that owns WeChat, Tencent, has developed an app like Zoom called VOOV, V-O-O-V, that is also in wide use. Do we currently know of any potential opportunities in the aftermarket here in China for U.S. aftermarket parts. While we don't have specific product requests to share at this time, opportunities are forecast to increase quickly. The automotive aftermarket industry is now generating more revenue in China than any other country. By 2022, it is forecast that the Chinese automotive aftermarket will exceed $281.8 billion in revenues. A tipping point in the Chinese automotive aftermarket was reached in 2018 when the average age of vehicles in China rose above 5 years. Demand for consumables, including motor oil, batteries, brake pads, spark plugs, lamps, wiper blades, coolants, and automotive chemicals are expected to rise as a result. But the development of new automotive technologies will extend the type and range of automotive aftermarket services that suppliers will be called to offer. China's increase in new energy vehicles, or NEVs, on the road will likely impact how quickly demand grows for aftermarket products for the cars that continue to rely on the internal combustion engine. Car companies are also anticipating a big move into intelligent and connected vehicles, including a significant percentage of the vehicle market that's expected to be taken by driverless cars by the year 2035. These industry movements have allowed tech giants to become more involved and invest in the development of autonomous driving. Such developments will increase the need for more high-tech aftermarket suppliers to service the Chinese car market. These trends present both challenges and opportunities for global aftermarket suppliers. In closing, while there are many challenges here in China, the market is growing and there are significant opportunities. Now, you have my email address, jeffrey.dutton@trade.gov. So I'll look forward to receiving your questions and being in touch with all of you about any questions or issues you'd like to raise. Thank you.